Reliance Industries has just posted their numbers on the exchanges. We're just going to wait for the numbers to flash on the screen. Rima, do you have the numbers?
Yeah. It's 1,46,000 by way of revenues. Let me first give you the profit number. Profit is coming in 9,516 crores. So that's slightly lower than what we were estimating. Our poll was at 9,710. So the profit number has missed our expectations by close to about 200 odd crores. So that is one number that we have. The revenue from operations is coming at 1.46 lakh crore, which would compare with about 95,000 crore of revenues a year ago.
Okay, so 1.46 lakh crores is largely in line. 1.38 lakh crores was the expectation, so it's largely in line. But 9516 crores is actually about 200 crores lower than what the street was estimating. Remember, 9710 crores was the expectation. Now 9516 crores, that compares to 9459 crores last time around. So 9516 compares to 9459. So that's a growth of just about 0.6% on the bottom line. We were expecting a 2.3% growth. So just a 0.6% growth is what we're seeing quarter on quarter on the bottom line number. So that's prima facie the first number that we have. Top line is at 1.46 lakh crores.
1.43 lakh crores. Sorry.
Okay, 1.43 lakh crores. This compares to about 1.29 lakh crores last time. So that's about a 10% quarter-on-quarter revenue growth that you're seeing, which is fine. 7% was the expectation. 21,108 is the EBITDA number. That's in line with expectation. So the margins at about 14.7% versus an expectation of 15.2% was the margin. But remember, this is still lower than the 16.5% that we saw last time around. So it seems to have been some disappointment on the margin front as well as on the bottom line front. These are the prima facie numbers.
There is a sharp increase in the other income. So the other income has gone up quite a bit. I think it's more than about 18,000 crore rupees. So that's one of the reasons why the margin is coming lower than our expectations by close to about 50 basis points, with margins coming in at 14.7%. A sharp increase on a year-on-year basis in the other income.
Okay, I do have the segment-wise performance. Now the Petchem EBIT for this quarter has come in at 8120 crores. That really, if you look at what the expectation was 8490 crores on the Petchem EBIT. So that is, Petchem EBIT is slightly lower than expected. Remember, it was expected to be a very strong quarter. I mean, if you compare it quarter on quarter, it's still a growth. So 8120 crores on the Petchem EBIT compares to 7854 crores last quarter. So it's a 3.3% quarter-on-quarter growth in the Petchem EBIT, but the growth rate has slowed down a lot. If you look at it last quarter, there was a 22% quarter-on-quarter growth in Petchem EBIT. The quarter before it was an 11% growth, and before that 16%. So growth rates on a quarter-on-quarter basis have slowed down. Also, the refining business has slowed down. 9.5 is dollars per barrel is the gross refining margin. That is lower than expectations. The expectation was $10.2 a barrel, and it is lower than what we saw last time around. Remember, the refining business was expected to be muted because of the lower gasoline crack spreads, and the Singapore gross refining margins were also flat, but I think this is lower than even the street estimates, and this won't go down well with the street. So in case you've just joined in, the Reliance numbers for now, the operational performance is slightly below what the street was estimating. The gross refining margins at $9.50 a barrel lower than estimates, and the Petchem EBIT growth has also slowed down to just 3.3% quarter on quarter. I'll go to my colleagues in a bit, but Mr. Tulsian is also here with us. Mr. Tulsian, prima facie, how do these numbers look?
See, Sonia, if I first come on the retail, where there has been excellent surprise, the EBIT has seen come in at about 1,244 against 1,069. So I think that are really the blast, because even if you take the turnover, the sales in the income has come at 32,436. Obviously, this includes the petro products also, but we have to see the Reliance retail number, that is one. On Petchem, we have been expecting 8130 crore as the EBIT. It has come at 8120 crore. So again, that I don't think that there has been any kind of miss. Coming on refinery segments, in spite of, in fact, it is surprising, maybe the crude throughput processing may have done higher, because we have been expecting it to be at 16.9 million metric ton, but we have to see that how much throughput has been processed. So Refining EBIT has come at 5322 crore, which was at 5315 crore on the same on a QOQ basis, and we are seeing a fall of $1 per barrel. So in spite of there is a fall of $1 per barrel in GRM, the absolute refining EBIT has been seen almost at same, as I said, 5322 crore against 5315 crore. So I don't think that there is much disappointment can be taken on refining fronts also. Now coming on the Reliance Jio, again I think there has been a big surprise, because the EBIT has come at 2042 crores against 1715 crores on a sequential basis. I think the disappointment mainly has come on the reduction in the other income. If you see the income which has come at 635 crore minus, which was at about 5 crore plus. So there has been little disappointment on that, and that has in fact brought down the estimated PAT. But apart from that, the saving has come in the form of lower deferred tax. In fact, I never consider the deferred tax as an item, because it's a non-cash item, just a bookkeeping entry. So in the Q1, the deferred tax liability was provided at 1234 crore against 732 crore in this quarter. So there has been a saving of about 500 crore rupees in the deferred tax, which got offset by the lower other income, and that's the reason you have seen the PAT being maintained at 9549 crore against 9484 crore. So overall, I think the results on the Reliance retail front has been excellent. Reliance Jio has been showing better than expected numbers. PAT is more or less on the similar lines. On refining fronts, I don't see any disappointment. The disappointment has largely come on the fall in other income, which got compensated by the reduction in the deferred tax liability. So this is the in nutshell, and I think that these numbers will not go as negative or disappointment for the market going forward.
Okay, we're also getting some more news. Hathway board meeting, which is also there today, they've approved fundraising to the tune of 2,940 crore rupees, which would be via a preferential allotment to Reliance Jio, which means Reliance Jio will get a stake in Hathway Cables, and the expectation is that along with that, they will also get a board seat. We'll just have to try and calculate what will be the percentage stake. They will be getting close to about
51% stake is what they are going to get for that, and the price is given 32.3 rupees per share thereabouts, and Hathway's previous close was 29.5, so you have a 3 rupee premium, roughly 10% premium to the previous close, and 2940 crores. Hathway's market cap was close to around 2600 crores, so 51% stake is what Reliance would be getting because of that. So that's CNBC TV 18 Newsbreak confirmed out there, and I believe that after this there will also be an open offer, given that they are allotting 51% stake to another entity.
You know, when the Reliance, go ahead.
No, I just want to put the retail numbers out as well. Mangalam, I'll come to you for that. The numbers for retail are looking pretty good.
They're looking good. You know, you guys are talking about operational miss, but retail has been the brightest spot right now. We were working with a growth of about 80-85%. Nomura's expectations. Retail business has shown a revenue growth of 121%. So that's 4 consecutive quarters of 100% plus growth on the retail business. They've done 32,400 crores in this quarter in their organized retail business. So even if you remove the 50% of petrol and Jio out there, would be around 16,000 crores in Reliance's organized retail business in terms of revenue. That's the core retail business. Margins have come in 3.8%, which is a tad bit below what they did in the previous quarter. 4.1% is what they did out there, so 30% decline out there. But on an absolute basis, if you're doing revenue growth of 121%, and if your EBITDA is coming in at 1,244 crore, I believe this is the highest ever retail quarterly revenue as well as EBIT. And for the first half of this year, they've done 60,000 crores in terms of retail revenue. Majority of the street was expecting 1,20,000 crore in terms of revenue in FY20. So there is a chance that the company will do what they're doing, what the street was expecting in FY20 in FY19 itself, and that changes the valuation picture for the retail business.
Okay, so the retail business is doing well. We just have the RelGeo numbers as well. The EBITDA for RelGeo has come in at 3,573 crores, which is largely in line with what the street was estimating.
It's in line with expectation.
Growth,
yeah, but the thing is, the revenues have crossed that 10,000 crore mark, which is significantly higher than what we were anticipating. So if I just take the EBITDA at 3,573 on a base of 10,000 crores, then the margins would come close to about 36%, so slightly lower than expectation. But a big beat on the revenue front, crossing the 10,000 crore mark. We don't have the exact number, number, but we were expecting revenues to be at about 9,100 crore, so it's come in a good 10% higher than expectation. The other big positive has been the subscriber growth. Companies reported a net subscriber base of 252 million, which means on a quarter-on-quarter basis, the subscriber addition is at 37 million, which would compare with about a 29 million subscriber addition in the prior quarter. So clearly, their offers like the Monsoon Hangama offer, the Jio Phone 2 has resulted in increased traction for the subscriber growth. So net-net, to summarize the numbers for Jio, big beat on the Jio revenues, crossing 10,000 crore mark. Absolute EBITDA in line with expectation, but margins would be a tad bit lower. Profit is coming at 681 crore. There is an improvement on a quarter-on-quarter basis. So 681 crore would imply an improvement of close to about 11.5% on a sequential basis. But the street was working with a higher profit number. So that's a bit of a miss. Subscriber growth at 37 million on a quarter-on-quarter basis is much higher than expectation. And ARPU is at 132 rupees. Is a decline on a quarter-on-quarter basis, but something that the street was anticipating. So net-net a mixed bag.
A mixed bag. In fact, the key bread and butter businesses, the refining business and the petchem business has slowed down. The gross refining margins at $9.50 a barrel is the lowest in at least 9 quarters for Reliance Industries. And the petchem business as well, if you look at the EBIT number, the growth has slowed down to just 3.3% quarter-on-quarter versus double-digit growth that they have seen in the petchem business for many quarters now. Sonal, any more details on that?
Yes, absolutely. So Sonia, even the margins, they have come down by 100 basis points for the petchem biz, and that is because we were expecting, because the realizations in all different products were lower this time around, and that is because only in the PX products realizations were up on a sequential basis. That was around 43%. Apart from that, pet margins have softened since then, after realizations have softened. And the other thing that has happened is one of the key raw materials, that is ethane. For that, the prices, input prices have increased by around 63% on a quarter-on-quarter basis. So that could be one of the reasons why the margins have slowed down a bit. This impact could also be seen in the Q3 results. And also about the other segment, that is the refining segment, you already spoke about it. The Singapore refining margins, they were lower this time around, and also that was because of the lower LH spreads. So some weakness is seen in refining also, but that brings me to this question, and if Mr. Tulsian is with us, I would like to ask him that. Mr. Tulsian, the refining business has been slowing down since past few quarters, but there are new IMO regulations that are coming into effect. What do you make of that? Will this weakness be converted into some strength once these IMO regulations are put into place?
In fact, that is what I think it seems that has already started showing the reflection into the better numbers. As I said, that if you take the absolute EBIT on the refining fronts, it is at 5322 crore. And in spite of the drop in the GRM by $1, if you have the absolute, so either there has been throughput processing or the capex having carried out all these new regulations which have been referring to, all this have contributed to this rise. So that's the reason that I don't think that market maybe on the absolute number of 9.5 will be seen as a bit negative, but that was largely factored in. So I think that on the refining front, the things are looking to be as a status quo.
Prakash, what are your thoughts on Reliance Jio and the numbers they've reported?
No, sir, I heard you talk about the disappointment in the margin profile, but, given the fact that the base is so significantly higher, and we've been hearing about the street whispers of potentially another package which could enhance ARPUs, and which means over this base you could subsequently look at incremental revenue going up, and that's going to be a blockbuster. What they've done is they've created a base which is formidable for anybody else to compete with, and with this economies of scale and the utilization of that bandwidth that they have invested into, any incremental change in ARPUs is going to be significantly translating into revenue. So very, very impressive numbers. In fact, it's become more of a telecom and retail P&L than the petchem and refining side. On the refining side, what Sonal was talking about, I just wanted to add, the volume enhancement seems to be significant. You wouldn't have got these numbers without that. That's almost like 8-10% volume enhancement in a benign environment. So, the market will kind of be accepting of that fact that you had a tough environment and you still had, and there's no heavy crude distillates that they have probably looked at this time, and that's exactly where they've relied more on volume increase to get that top line.
In fact, the petchem production has come in at 9.4 MMT, which is a 19% year-on-year growth, slightly higher than the 9.3 MMT which the street was estimating. So not bad in terms of petchem production. Sanjay Bhasina is also with us, so let's go straight to him as well. Sanjay, for now, it seems like the refining business has been weak. Slightly the growth rates have slowed down there. The GRMs is the lowest we've seen in at least the last 9 quarters. But on the flip side, you've had a good beat in revenues from Jio and a good growth in the retail business as well. How do you see the stock move on Friday?
Well, it's telling you that, Reliance foresees 20 years in advance where it wants to reach, and this whole process now is telling you Reliance from energy is slowly becoming a tech-oriented company with maximum focus now on the retail side and the ARPUs. And that has pleasantly surprised quarter on quarter. I would say the petchem margins coming from such a high base, if they maintain that itself is a positive. And for the GRMs, you could have a 1 quarter hiatus. So all in all, I would say the numbers are in line. The stock has relatively been one of the better performers on the Nifty, and I see no let up. I think the formation of becoming a technology company with the advent of more broadband, and we'll know more how much more they've covered as in cities. I think the new packages from Jio will, so I think all declines on Monday or on Friday would be opportunities to buy if the pessimism on the GRMs rubs in.
Okay, well, Abhijit Bora is also with us. Abhijit, the consensus seemed to be that, Jio's numbers, the 10,000 crore revenues, sort of supersedes all the other weakness that we've seen in the earnings. Do you agree with that view? Do you think that the stock would move higher on Friday? Or would you be disappointed with the way the petchem and, the refining business has moved?
See, refining is surely below the expectations, so that is a drag on the performance. But if you see the Jio numbers, the subscriber addition has been strong. ARPU has been largely stable at 131. So that is a positive sign from for the company. So all in all, we see only disappointment on the refining side. Overall, we see a strong quarter.
Okay. In Hathway, Reliance will be acquiring a 51% stake, but in DEN Networks, it will be acquiring close to a 66% stake. It's good for Hathways because the company has a high debt, it has a leverage problem. So this acquisition by Reliance will help in solving that problem. And for DEN Network, it wards off competition as well. If we have Mayuresh Joshi with us still. Mayuresh, your thoughts on Reliance Jio acquiring Hathway and DEN Networks when the AGM was announced and Reliance had for the first time indicated its broadband plans officially and formally. Hathway had fallen all the way down to that 15 rupees. So from that level, the stock has actually doubled, to levels of 30 rupees and now even higher at the price at which Reliance will be acquiring it. Your thoughts on these two stocks from current levels?
So again, I think what acquisition will probably happen in terms of enterprise value, I think is going to be extremely critical for both these stocks. And again, I think the interest was that Reliance will take a controlling interest in both these entities because that probably gives them the necessary bandwidth both in terms of an existing subscriber base as well as I think they can probably merge their infrastructure. So I think the last mile connectivity is something which is very, very critical. So I think one really needs to understand the exact contours in terms of what probably happens with an EV perspective. But for Jio, I think it is a beneficial move as well. So the other businesses, again, I think apart from this, I think the numbers have held out pretty well. So 131.70 ARPUs, 252 million subscribers. Again, expectations of new packages coming through. I think the business should hold out pretty well for Jio in particular.
Okay, so Jio business could hold up well. Don't lose sight of the scorching pace at which retail is growing. As Mangalam was also telling us, the revenues at 32,436 crores in this quarter is a growth of 25% on a quarter-on-quarter basis. I mean, the expectation was just a 5% quarter-on-quarter growth. It's come in at a 25% quarter-on-quarter growth in the retail revenues, and the EBIT has gone up 16% quarter-on-quarter.
Okay, I just want to make some correction on Reliance Jio. That time we only had the press release where they had indicated that Jio's revenues crossed the 10,000 crore mark. Now we've actually got the P&L. The operating revenue, which is what we look at, is at 9,240 crore, which is a growth of 13.9% on a quarter-on-quarter basis. So that is just about 100 crore higher than expectations. It's the gross revenues that they were referring to, which has crossed that 10,000 crore mark. But our poll and what we look at would be the net operating revenues, and that is 9,240 crore, a growth of 13.9% on a sequential basis. It is slightly higher than expectations, but not the blockbuster beat that we earlier were referring to. This would imply a 50% jump on a year-on-year basis. So on a base of 9,240 crore of revenue, the margins would be at 38.7%. which means rather flat on a quarter-on-quarter basis, and profit at 681 crore, 11.5% increase, is actually lower than what we were anticipating. So net-net in the P&L numbers of revenues, margins, you would say in line, a bit of a miss on the profitability, but it is the scorching pace at which the company is actually adding the net subscribers at 37 million. That is a key highlight. The ARPU at 132 is also, pretty good and in line with expectations, but the pure revenue is not as big a beat as we had earlier anticipated. It's a marginal beat.
Okay, so in case you've joined in late, just to summarize the numbers are largely in line with what the street was estimating. There's a disappointment in the refining business with the gross refining margins coming in lower than estimated. And if you're looking for surprises, the big surprise has come in Reliance Retail once again, with a 25% quarter-on-quarter revenue growth and 16% EBIT growth. Mr. Tulsian, on the stock itself, the stock is, down about 15% from its 52-week high. Do you think there's anything in these numbers that will drive the stock on Friday, or you get a sense that it'll just be status quo?
No, Sonia, if you summarize the market behavior which is expected to be seen on Friday, if you see, we need to break the business of the company in two verticals. The old one, the bread and butter, like petchem and refinery, and as I said that on petchem, absolutely there is no disappointment. In fact, 9.4 million ton is seen to be a quite robust numbers, because 9.2 was seen in Q1 and Q4 last year. So that is again a relief that the EBIT has increased on that front. On the refining fronts, as I've said, that in the absolute EBIT number is seen to be flattish, though the GRM has fallen by $1, so that will not be seen a big, that will be seen a mild disappointment. So the conventional business with a low PE multiples are seen to be, having given a mixed reaction. But coming on the Reliance Jio and Reliance Retail, which are the high-tech business and showing excellent growth, on which the market multiples are also given quite high, is showing quite good. And the acquisition or the allotment of, or the acquisition of Hathway and Den. In Hathway, company will be acquiring 51.34% stake. In Den, they will be acquiring 66.01% stake, because they are partly acquiring some share from Samir Manchanda also. About 3.36 crore shares are purchased from the existing promoter. 28.14 crore shares are seen issued fresh. So total investment of closer to about 5,000 crore will see the acceleration of penetrating into the giga fiber. They will be able to penetrate about the 2 crore homes or the 2 crore subscribers. They are already combined presence in the about 65 lakhs homes. They have the presence in the digital connection and the digital broadband and the broadband connection both. So that will be seen the faster implementation of the giga fiber also, which is going to get liked by the market. And Reliance Retail, again has shown the excellent performance. So both these new age business, which are carrying the high P multiple, are going to get liked by the market. So in nutshell, if I summarize, probably these results will be seen quite positive by the market, and we are keeping the positive view on the stocks with a price target of about maybe 1220 to be seen in the next 1 week or so. But Friday should see the positive opening for the share price to be seen.
Right, Mr. Tulsian, we take your point on the retail growth. The first half of this year, Reliance Retail has done about 60,000 crores in revenue. Majority of the street was expecting this to come in FY20. Now that this has happened in FY19, how much would you value the retail business at? I remember you telling us, expecting about $15 billion of revenue in the retail business in this year. Looks like that will surpass.
See, again, Mangalam, it is very difficult to take that call, because it all depends on the oil and gas contribution also in that, because if the crude keep rising. But I think that if you want to take the absolute valuation call on the company, that's Reliance Retail, that is seen rising every day. Because earlier we have been taking the valuation in some of the part at 1,25,000 crore to 1,30,000 crore. Now that will definitely get enhanced to 1,50,000 crore. And coming on the $15 billion turnover, I don't think that's seen at all. In fact, that's seen rising quite a lot. So yes, on the retail front, as I said, we are in fact holding quite a positive view going forward, and that will get translated into the share price on some of part basis as well.
Okay, Prakash, what about you? What do you see as the stock move? Because it seems like there are no major positive surprises barring Reliance Retail. I mean, you know, the Petchem EBIT has slowed down, the refining business is weak, and RelGeo, as Rima was telling us, not as good as what we had expected. You reckon that there won't be a major stock move on Friday?
You could possibly see Friday to be fairly hum-ho kind of a this thing, because you know, the numbers that you see, the metrics that you see, particularly on the good side of the business, the geo and retail number, they're all work in progress. There's nothing which is yet you know, given you that this thing that this is already translated into earnings. But remember one thing, what the street likes, and why would somebody like a stock which is not gone into results with too much of hype and too much of you know, upside. The stock hasn't been on a tear of sorts before going into results this time, unlike a lot of other instances and quarters in the past that we've seen. Before the numbers, it keeps on getting slightly firmer. What the street will like in this entire set of numbers, Sonia, is the capital allocation is in the right direction. It's in businesses that are going to grow at a faster pace as compared to in the past, where, you know, they invested a lot into refining, the petchem business, particularly the catalytic cracker units and all that. So all that is now done with. You are talking about raising money, putting money into businesses which are going to have very strong ROEs and a very accelerated return on capital. So that's something which everybody is going to like, especially on a big balance sheet like this. So I think if not Friday, at least next week onwards, you'll start seeing a lot of upgrades translating into ownership coming back to the stock. Nothing much maybe on Friday, but at least eventually at 1150, 1200 zones, the stock definitely promises you much more, given the retail and geo build-up that we are seeing in this quarter.
Okay, so let's just try and wrap up. It's been a mixed quarter for Reliance Industries this time around. The refining business has been weaker than what the street was estimating for sure. The petchem business largely in line. RelGeo business not too bad, but retail has been growing at a scorching pace. Sanjeev, would you expect to see any EPS upgrades post these numbers, or do you think that you know, because it's largely an inline set of numbers, not too much of a move?
No, I don't see any change in the guidance. It will be more or less flat. You'll have compensated the weakness in energy with the geo, and you know, the stock also will be status quo. You could see a 3% downside, and it will be in tune with the market. Today it outperformed, it didn't fall much, and that was one of the reasons the Nifty was still, you know, others you could have seen another 50 basis points on the Nifty. So I think it will be more in tune with the market sentiment, which has been very, very volatile. But I don't rule out a fall of 2 to 3%, at least on Friday.
Oh, okay, a fall of 2 to 3% is what you're looking at. All right, thanks gentlemen for joining us. Sanjeev, Mr. S.P. Tulsian, Prakash Diwan, Abhijit, as well as Mayuresh, thank you for taking the time out. Standard disclosure, of course, Reliance Industries owns the channel that you're watching. Just a quick summary of the numbers then. It's a mixed bag for Reliance Industries this time around. Weak refining business, lowest gross refining margins, at least in the last 9 quarters. The petchem business as well, the growth rates have slowed down over there. Reliance Retail is the only you know, shining star for the company this time around, and RelGeo as well, Rima, as you said, not as strong as one would have expected.
It's not a bad quarter, but there is no big positive surprise except the fact that the subscriber addition is actually quite good, and the profit has missed expectations on the back of higher finance costs. So that clearly is weighing. Okay, and we can get